Previously, we have talked about the first part of security market indexes in China. And now let's move to topic 6. We'll continue to talk about the stock market index part 2 in China. In this topic, we will talk about one of the most famous stock market index series in China, which is the Shanghai Stock Exchange Stock Market Indexes. Let's look at our topic case first. Okay. So in this figure, we have two curves. The first one is the Shanghai Composite Index. Okay, now we have a new name, Composite Index. Then the orange dot lines represents for the CSI 300 we have just learned. And in this picture, this is the dates. We are also using two vertical axes. The left one, its order of magnitude is from 3,350 here till 3,700. It is for the SSE Composite Index. And the right side is for CSI 300. Its order of magnitude is from 5,000 to 5,800. Simply from the two curves in this figure, we can find out first, these curves are different from each other. However, they have similar trends to each other. Although, starting from this period, they are not very much in sync with each other. But we still have to say, in general, their trends are quite similar. Because in every major turning points, they are similar to each other. Yeah, quite similar to each other. Yeah. Just now, we have introduced the CSI Stock Market Index series. Here, we introduce the SSE Stock Market Indexes. Here, SSE represents for Shanghai Stock Exchange. The most famous one in Shanghai Stock Exchange is called the SSE Composite Index. Okay. Whenever you look at financial news, when they talk about stock market, I believe they will introduce what is the SSE Composite Index today. They will say, okay, today is about 3,200 with 1% up. Okay, this is about SSE Composite Index. Now, we have known the second major type of index. It is different from the component index we have just learned. So what is a component index we have just learned? Let's have a quick overview. A component index do not use the whole stocks in the market, but use only selected part of the stocks in the market. This is a component index. However, for a composite index, it covers all stocks in the stock market, except nowadays ST stocks. ST here refers to special treatment. Special treatment. Well, it is a very special word in China, only in China. Okay? It is based on all shares, including outstanding and non-outstanding shares. So this is China's most famous stock index, not one of them. Not one of them. It's just the most famous one, right? So in any financial news, it is usually introduced in the first order. So previously, it simply covers all stocks, but there is a reform on this index. Remember, starting from last year, it removes all ST stocks. ST here refers to special treatment. Most famous one, not one of them. However, in SSE, there are also other stock indexes, such as the SSE-50 index. Well, whenever we look at the number after the name of a stock index, it must be a component index. It must be a component index. It uses the 50 biggest shares listed in Shanghai Stock Exchange, and based on these shares to calculate this stock market index. And SSE 180 is based on 180 biggest stocks in Shanghai. Then in recent years, another very famous stock index in Shanghai is called the Star 50 index. The Star 50 index. It focuses on the 50 biggest stocks in the starboard. Besides this stock index, in Shanghai, there are also many other indexes in order to reflect different parts of the stocks in the market. For example, SSE Super Cap Index. Here, cap means capitalization. Capitalization. It focuses on those mega stocks. Such as PetroChina, such as China Life, such as Industrial and Commercial Bank of China, such as China Construction Bank, such as Agricultural Bank of China, such as Bank of China, such as PICC. Okay. These are super big stocks listed in Shanghai. And then we have another one, the opposite side, small cap index. Okay. It focuses on small size stocks listed in SSE. We know that in stock market, there is a famous effect called the size effect. The size effect. Its theory is size matters. Size matters. That means the market behavior of big-sized stocks is very different from that of small-sized stocks. In this way, whenever we need to do a regression test on stock markets, we usually use the size factor as one of the dependent variables at the right side of a model. The right side of the model. Okay. Model is y equals fx, right? This is right side. So we use a size factor as one of the dependent variables because of the size effect in the stock market. Well, this is the Python script for the topic case just now. We are using the same command, compare security. These are the two securities we expect to compare. This represents for the SSE composite index, and this represents for the CSI 300. We are comparing their close price. This is the periods of date we expect to compare. This is the start date and this is the end date. And this is the option. We use this option to tell this Python command that please draw pictures using two vertical axes. This is the left one and this is the right one. If we do not have this option, this Python command will draw the picture using one vertical axis, the left one. Now let's do the practice together. then we can update this command to the most recent days we have. It's today. Let's copy it into Jupyter Notebook. Okay, well, it's not this. We copy here. Yeah. In order to see this command clearly, let's add. Okay. Okay. Python is telling us some of the message about the executing status. Searching prices, trying to capture prices for this one. This one is the SSE composite index. Okay. It's running faster than what I speed. This is the newest situation between SSE composite index and CSI 300. This index is made by CSI company, and this index is made by Shanghai Stock Exchange. This one is a component index. A component index. Let's use thinner ones. This one is a composite index. Composite index. Although they use different calculation algorithms and use different component stocks, these two indexes should perform in different ways. However, when we look at this picture, we find it is starting from January 2021. Well, it is out of date, right? Let's do a new one. Okay. Starting from January 1st this year till 2022, July 20 means today. Let's look at this again. This message tells us Python command has already successfully retrieved 617 records for SSE composite index. This one is for CSI 300. Now let's look at the situation in this year. The blue solid line represents for SSE composite index, and the orange dot one indicates CSI 300. Again, this one from CSI company, and this one from Shanghai Stock Exchange. This one is a component index. Component index. And this one is a composite index. So they have different calculation measures, and they have different stocks based on which the index is calculated. So they should be different. However, from a relatively long run, we can tell that, yes, they are different. However, the changing trends are very similar to each other. So this is a magic findings. Although the component index here only based on selected 300 biggest stocks in China. They try to use the selected best 300 stocks to represent the situation of the whole market. Right? Do they make it? Yes, I believe it make it. CSI 300 make it. Why? Because we look at the SSE composite index, it use all the stocks in Shanghai except ST stocks. So it can cover more situation of the stocks market in Shanghai. However, these two curves, they have pretty much similar trends to each other. Similar trends to each other. Right? They have similar trends to each other. So, from this sense, both the component index here and the composite index, they are successful in terms of describing the price level as well as the changing trend of the market in China. So that's why they two are all famous market index in China. Next, let's look at another market index in Shanghai. It's called Star 50. Star 50 tries to describe the price level and changing trend of the star board in Shanghai. Let's compare the differences between two boards in Shanghai. This one, SSE Composite Index, represents the whole situation in Shanghai, the whole situation. And this one represents for the situation of the star board in Shanghai. Let's look at the differences between the star board and the overall market in Shanghai. This is the picture of the comparison. In this picture, the blue solid lines for the Star 50 and the orange dot lines represents for the SSE Composite Index. We still use two vertical axes. The left one is for Star 50 and the right one is for SSE Composite Index. So what are the differences we can find from this figure? First, they look very different from each other, right? And second, we find that there are also much similarities between the two. Although their trends sometimes may not be in full sync with each other, not in full sync with each other. But in general, they have similar trends. This is the situation from January 2020 to July 2021. Now, let's do an exercise case together to see the situation in this year between these two. Let me introduce further. The Star 50 index represents for the market situation of those high-tech companies listed in Shanghai Star Board. So in Shanghai Star Board, primarily there are two types of companies. One is high-tech companies. Another is fast-growing companies. Fast-growing companies. These two companies are warmly welcome in Star Board in Shanghai. Now let's look at the market of these two kinds of companies. What are the differences comparing with the main board in Shanghai? And this one, SSE Composite Index, primarily describes the situation of the main board in Shanghai. You may have the question, Professor, you have just said that this represents the whole market situation in Shanghai. However, in Shanghai stock market, the main board stocks are absolutely the mainstream in terms of number of stocks, in terms of total shares, in terms of total values, almost every measurement, they are absolutely mainstream. So sometimes we say that SSE Composite Index represents for primarily the situation of the main board in Shanghai. Okay, the Star Board in Shanghai compared to the main board, it's still too small. Now let's do the exercise together. First, let's copy the command. Okay, let's copy the command. There's the copy. Let's update the date to this year, 2022, January the 1st, 2022, July 20th. Let's press Shift plus Enter key to let the Python go. This is for SSE Composite Index, and this is for star 50 index. We have a star here. Now we have the results. The blue solid lines for star 50 and the orange dot lines for SSE Composite Index. What are their differences? From long run, this is more than half year. First point we have is, we have to say in general, in terms of big trends. In terms of big trends, they are similar to each other. Yeah. Second point, we still have to identify the differences between these two indexes, right? We see that in some of the periods, these two curves are in different trends, or we say in short run. Short run. They are not in sync with each other. For example, for this area. Okay. For star 50 index, it's roughly flat. However, for SSE Composite Index, it's down, then up again. It's about at the end of January this year. So from long run, these two curves are quite similar to each other. However, from short run, they may be different. Also, we can see here, for star 50 index, this area is relatively flat, although there are lots of fluctuations, but in overall, its index values is flat. However, during the same period of time, the SSE Composite Index goes up, then to a platform, to the peak, goes down. Okay. So we have two findings from long run and from short run. Okay, this is our findings. This is the exercise case we have done together. Let's move to topic 7. In topic 7, we'll talk about the stock market indexes in Shenzhen. The SJSE stock market indexes. Okay, we have a very famous stock market index in China as well. It's called the Shenzhen Component Index. The Shenzhen Component Index. Okay, let's have a quick summary of the 3 famous stock market index in China. The first one we call the SSE Composite Index. And next one we call the SJSE Shenzhen Component Index. Okay, please be aware this is component index here. And the first one is composite index. And the third one is CSI 300. Next time, when you watch TV on financial news, you will see that each time these 3 index will be introduced about their current level and up and down. So you may have a question. Okay, we have 3 major market index in China, and what are their differences? So in order to compare the differences between the major stock indexes in China, we can look at from long run and look at from short run. This picture is an analysis from long run. It's from January 2020 to July 2021. This picture is drawn on 2021, June 27th, and it used 2 vertical axes as well. The left one is Shenzhen Component Index. Let's look at its order of magnitude from 10,000 to 16,000. And the right side is for SSE Composite Index. Its order of magnitude is 2,800 to 3,600. Yeah, apparently these 2 securities order of magnitude is significantly different. So we use the method twinks equals true. We tell the Python command to draw the 2 curves using 2 vertical axes in order to describe in more details. Okay, this is a long run. What can we find from this figure? First, we find that from long run, the trends are pretty much similar to each other. Similar trend. Yeah, similar trend. And from short run, okay, of course, they will be different. However, from this graph, we are difficult to find out the differences between these 2 indexes in short run. So in order to find out, we need to use a short period of dates to describe these 2 curves. In that way, we can find out the differences in the short run. Okay. And we can practice this. Okay, before we do the practice, let's have a quick introduction about the stock market indexes in Shenzhen, in SJSE, Shenzhen Stock Exchange. The most famous one in SJSE stock market indexes is this one, the SJSE Component Index. It's very famous. Okay, it's a component index. It covers 500 stocks in Shenzhen Stock Exchange, except ST stocks. And they are based on shares outstanding. So first they rank the shares outstanding from high to low. Then they select the first 500. Okay. Then we have SJSE 100 index. We focus on 100 biggest stocks in SJSE main board. And then we have GEM Composite Index. So let me introduce one by one. In Shenzhen Stock Exchange, there are many boards. The first one is main board. For stocks listed in main board, usually their criteria of IPO is pretty high. Yeah, so in this way, Usually the stocks in main board is big sized. Then SMB board in Shenzhen. Last year, SMB board is merged into main board. And then in Shenzhen, we have GEM board. The GEM board is initially purposed for high-tech companies, as well as fast-growing companies. So that's why the word GEM comes from. GEM stands for growing enterprise market. Yeah. So this is the basic structure of Shenzhen Stock Exchange. Of course, there is a bond market in Shenzhen as well. It's called the exchange bond market. In Shenzhen market, we still have another two type of shares. One is called A share. Another is called B share. While A share in Shenzhen is traded in renminbi, B shares in Shenzhen stock market is traded not in renminbi, it's in Hong Kong dollar. Well, this is the situation in Shenzhen Stock Exchange. What about the situation in Shanghai Stock Exchange? It's quite similar. First, they also have A share and B share. Of course, the A shares in Shanghai Stock Exchange is also traded in renminbi. However, the B shares in SSE is traded in US dollar. Well, there are main board in Shanghai as well, usually big companies with very high threshold for IPO. And then there are star boards for growing companies, initially purposed for high-tech company and fast-growing companies. Okay, we find that the GEM board, they use composite index. So we know that whether in CSI stock index series or SSE stock index series or SCSE stock market index series, there are both component index and composite index. So actually there are pros and cons for composite index and component index. Okay, let's replay this case together. We copy this command to Jupyter Notebook. And then in order to find out the most recent situation, let's change the start date to 2022, January the 1st, till July 20th. It's the day. This one represents for SSE composite index, and this one represents for SCSE component index. This is from long run. And this midterm run, right? Because it covers more than half a year. Let's look at the situation in long run first, then let's compare the differences of these two indexes in short run. For example, from July the 1st. Let's look at the long run first. Okay. This is the long run of the SSE composite index compared to the SCSE component index. So from long run, we can see that they are quite similar to each other, at least from the big trends. They are very similar to each other, right? Next, let's look at the short run. We just look at the situation in July this year. In short run, I believe there are many differences between these two major stock market indexes in China. Well, they still look similar to each other, right? That means in July, the two stock exchanges in China, Shanghai and Shenzhen, they move in similar trends. Okay, let's check in another situation. For example, what about the situation in July? Sorry, June. Okay, well, even in short run, their trends are also similar to each other. However, we still can see some of the differences between them. For example, for this area, it looks different. For this area, it looks different. Although there are similar trends, but okay, still different, I think. And this part looks pretty much similar to each other. We can see some of the difference here, some of the difference here. Then let me show you the function of this option. If we don't have this option, what will be this picture? Okay. Let's remove this function and then see the picture here. Since these two index order of magnitude is very different from each other, so there will be a phenomenon happens here. Okay, the new picture will look at this. Both index use the same vertical axis, which is the close price. And from this, you can see, okay, these two curves lost much of the details, right? So this is a very interesting phenomenon. If we use two securities to compare in one picture, and they two have different order of magnitude, if we use one vertical axis, both will lose much of the details. And compared to this one, we can find lots of details using the two vertical axes. While in this one, if we use just one vertical axis, we may find less things. This is the great advantage of using two vertical axes. Of course, we have disadvantage as well. Okay, let's have a 10 minutes break. And after the break, we'll continue this topic.